The recession is over. Let me repeat that. The recession is over. Now, I've been telling you that for 2 weeks now, but tonight, I'm not being redundant for a change. Tonight, I'm quoting the headline from a major new report out today from Merrill Lynch, one of the largest brokerage firms in the world. And Merrill says the recession ended on June 30th, the same day I declared on this show that this recession ends right here, right now. We got myriad other signs of hope today, and they don't come from a broker trying to sell you something. Intel came out tonight with a loss, but its revenue was $1 billion higher than expected. And Intel sees a stronger second half and raised its revenue estimate for this third quarter. J&J results were better than Wall Street was forecasting, and retail sales in June rose a bit more than expected, too. Even Treasury Secretary Timothy Geithner says today the force of the recession is receding. And that's about as giddy as a government guy gets. But the bigger story for me is Merrill Lynch is making a big, bold call here. Let's get to the real deal with Dennis Neal and break it down. Now, you know, if they let me drink alcohol on air, I would uncork a bottle of Dom right now because it's time to celebrate, okay? Let's have a recession-over party. Let the bitter, bashing bloggers sell doom and fear and jeer at my predilection for hope. Meantime, jump on this bandwagon with me, will you? Let's take a closer look at this Merrill report. It comes from the RIC. That's Merrill's Research Investment Committee. Okay? Now, the firm breaks down its argument in various ways, and I'm quoting from the 35 report itself right here. Growth forecasts, where's my line? That's my line. Growth forecasts are up. Okay? That's not a very good line, but there we go. Clear. Red draw. There we go. Okay, now let's try it. Growth forecasts, thank goodness, are up. All right? Cash should be reduced. That means you ought to get out there and buy some stocks. That's what they're saying here, okay? And Merrill Lynch adds, I'm going to step around over to here, that we are bullish on global equities, meaning, yeah, you got to buy some stocks. You get what I'm saying here? Now, let's clear that, baby. Now, take a look at this, okay? Give recovery a chance. They're almost like quoting John Lennon. I mean, and they say, encouragingly, our global economists believe the global recession ended in Q2 and a fragile recovery has begun. Well, heck, I'll take any kind of hope I can get. Thank you, guys. Now, you can see the Merrill guys here. They are appealing to emotion. And as I've said before, emotion is a big part of this battle. And this is the message that some 16,000 Merrill brokers will be preaching to several million clients. And there's also this. We are revising growth forecasts up virtually across the globe. They actually mean around the globe. I'm a former editor. I can't help it. But most notably in the U.S., and China. Now, you're only talking the two most important economies in the world. The U.S. is the biggest, and the China is the fastest growing large economy. We buy a lot of their stuff, but you know what? We sell a lot of stuff to them. Now, Merrill, it projects worldwide growth now of a healthy 3.7% next year. Okay, now that's up half a point from its first forecast. And Merrill also predicts that GDP in the U.S. will grow 2.7% in the second half. Now, it had been a much lower forecast than that, and Merrill says that the U.S. economy will grow 2.6% for next year. And it had only been expecting 1.7, all right? So that is actually a huge increase when you think about it. And an economy as large as the U.S. economy is, it's a good $12 trillion or so. 2.6 from 1.7, you're talking billions upon billions more in business being transacted. China GDP up to 9.6. Back to China's, old 10% growth rate from 8.3% previously. That's growth anybody would kill for anywhere else, okay? Now, Merrill Lynch did an extraordinary thing in this report. They surveyed $33 trillion in assets held by high net worth individuals, the richest people in the world. Now, $33 trillion is almost 3 times as large as the GDP of the entire USA and the largest economy in the world. That's a lot of coin. And Merrill finds this breakdown. Now, the super rich, they have only 25% of their holdings in stocks. Now, 25% means that they are acting as if they are investing as if they are 85 years old. There's this old axiom. You take 110 minus your age, and that's percentage of your assets that you should devote to stocks. Only 25% in stocks. And yet Merrill says in any moderate risk investor's portfolio, you ought to have like 50% in stocks, twice as much as these rich people have. Okay? Now, these richies, the swells, they have 21% in cash. 21% sitting there in cash. Now, Merrill says a better number in cash, even now, at a time when people are so afraid, might be 5%. When your money's in cash, it's not earning any return, right? It's not earning almost anything at all. And Merrill talks about fixed income bonds, all right, 30% almost in bonds. Never mind that bonds interest rates are near all-time lows. Do you know that Merrill points out that if you put money into a 3-month Treasury bond, all right, 3-month Treasury bond to keep it nice and safe, to make sure nothing ever goes wrong, and you just kept rolling it over, your money would double eventually. It's just that it would take 360 years. 360 years to double your money in a 3-month Treasury, and yet fixed income 21% to 29% for the rich. You know, if you can find an asset that will return, I think it's like 7.5% a year on average over 10 years, you double your money in 10 years, not 360 years. Now, I want to know what the professional doomsayers and the unprofessional doom bloggers will say to all of this. Growth, well, what they're going to say is this. They're going to say growth is going to be sluggish. They're going to say layoffs will continue to hurt the economy. The Fed must extricate itself after pumping too much money into the economy, and inflation could roar up if the Fed blows this transition. All of which may be true, guys, but those are hurdles that can be overcome. And stocks are priced for far worse than that. Stocks are priced almost for Armageddon. Do you really think some of the best brands in the world are worth only half what they were worth a decade ago, even though their earnings are double and triple what they were back then? Do you really think the U.S. of A. is over? We are on our last legs. We are out of ideas? No way, baby. I don't think so, and neither should you. This recession is over. Let the recovery begin. And if you can't believe me, take it from one of the largest brokers in the world, Merrill Lynch. But enough about me.